Okay, so let's go to page 2, settlement charges, section 700, total real estate broker fees. So this is about the commission the broker will get and who will be paying for it. So if you look to the right, there's a section noting paid from borrowers' funds and paid from sellers' funds. So this is a section where you will see who will be paying for the broker's commission. And usually it's the seller who's paying for it. So if you're the one purchasing the property, the section for borrowers' funds will be blank. So now let's go to section 800. It's related to the fees related to the loan to finance the real estate property. So remember on the HUD statement, where on section 201, where you pay the down payment or earnest money, and then you also indicate on section 202 the principal amount of the loan. So this part on section 800, it will discuss interest and fees related to the loan to pay for that principal. And normally the origination fee is around 0.5% to 1% of the loan amount. And this origination fee is how the loan processor is making their money as their compensation for helping you process the loan application. Because if you notice, processing a loan takes so much time. Like there's a lot of back and forth communication. So this is how they get paid. And you can actually negotiate the origination fees. However, when you were able to reduce it, usually it results to a higher interest rate on your loan. So let's discuss more in detail about the loan credit or points, or mortgage interest points, or what else they call this, discount points. So for example, you have a 200,000 mortgage loan, and you wanna, and your current interest for this loan is, let's say, 4.5%. So the mortgage point is kind of like giving you option to reduce this 4.5% to 4.25%, as long as you pay upfront the 1% of the 200,000. So again, 1 point means 1% of the loan, and that means you are gonna pay 1% of the loan in return for a lower interest rate, and the cost of that lower interest rate, so from 4.5% to 4.25%, it will just cost you $2,000. And it's usually worth it, because if for that interest rate that was reduced from 4.5 to 4.25%, that's already reducing your monthly payments of probably around $30 a month. And then however, if you calculate that $30 a month for a 30-year loan, you are actually saving at least $10,000 over time. So that $2,000 in return for that lower interest rate is really very helpful. So of course, let's say you wanna put more money towards the loan, you can double that points, like 2 points. So it's kind of like, every So one point is 1%, so 2 points means 2%. So of course, the higher points that you're willing to pay upfront for, the better your mortgage payments will look. And that means, for example, if you paid the 1% of the 200,000 related to the loan, and you could probably save at least $10,000 in 30-year long term. If you pay for 2 points, or you paid upfront $4,000, you're actually gonna save twice as much, which is like around probably $20,000 in a 30-year loan. So now you understand about the mortgage points. So in terms of accounting, the mortgage points are not part of your adjusted basis. This is actually part of the depreciation, and you can only include that because we call it depreciation, but it's actually amortization, because we are not really deducting the entire thing on our tax return. We should only deduct portion of it over the life of the loan. So let's say we have $4,000. We chose the 2,000 points for a $200,000 loan. We can only expense that for 30-year term if that's our loan term is 30 years. However, you can actually expense the entire thing if we are talking about primary residence. So if you are purchasing your primary residence, or as we call it, our capital property, capital asset, real estate capital asset of your primary residence, then that points, you can amortize it. I mean, you can expense it for the entire, for the same year you purchased the property. And so remember that if it's related to the primary residence or capital asset of your real estate, you can expense the mortgage points on the same year that you purchased the property. In some loan statements, you will see some amounts on Section 804, which is the appraisal fee. Appraisal fee, this is kind of like you hire someone to provide the value of the property, the market value of the property. So if there's an appraisal fee on this HUD settlement charges, and if it is required to even get the loan, then the cost here, you need to amortize it over the life of the loan. You cannot deduct it in the same year. However, if it's not required, you can add this cost to the adjusted basis of your property, and it'll be just part of the depreciation that it will be part of the depreciation calculation that you amortize over the life of the property. And there are other charges that that you will also need to pay when you're getting a loan. So if that's how expensive it is to purchase a property. You're not just purchasing the property. You're not paying for just the property alone. You're paying for the commission of the broker. Then you're paying for the taxes related to the property. You're paying for the loan processor fees and the mortgage points, so you can have a better interest, and of course the actual interest that you need to pay. And then there will be like appraisal fees, credit report fees, which you will see in Section 805. 806 is like the lender's inspection fee. You actually should do this. Make sure that the property is inspected, because there are a lot of things that you will that will come out when there is a professional inspector of the property, because there are things that you cannot just see by just looking at it. It's good to have a professional inspector. So, because if there are things that you need to get fixed before signing the closing settlement document, then it's kind of still like, at least it'll be part of the negotiation. Section 807 is like mortgage insurance application fee. So this kind of like any insurance that's for the property, like home insurance. Section 808, it's the assumption fee. Section 809 is for flood certification. Section 810 are the other credit report fees. So it could be different in different HUD settlement, but those are just like this. For this example, the Section 807 was the flood certification, and 806 is tax service. But the thing is, you have to just read what's on the description in each section, so for you to understand what are the fees that you're paying. And all these fees, you have to amortize this over the life of the loan.